Hi, everybody. Thanks very much for attending. I've noticed a lot of you have been on our market updates as well as our estate updates. So really appreciate all your support and all your attendance and attention while this stuff is going on in the world. So today we're going to talk about the business government benefit support. And of course, myself and Kelly Taylor. Thanks also, Kelly, for being here and making the time. And then we've got Jeff in the background running the session. So we're going to do this one slightly different than we do some of our other sessions. We're going to actually stop in between just because I'm finding a lot of people are, the government is not always forthright with information. So they're doing their best to try to get it out, but I know there's been constant changes and we've been asked a lot of questions. And so we're going to break it apart per session, and then we're going to stop and we're going to ask questions. So as you guys go, you can feel free to go into the chat session and ask a question. You can also go into the question area. You can also raise your hand and we can unmute you, but please make sure, I know in other presentations people didn't have mics and they didn't have screen stuff. So if you don't have a mic, you can call in. So make sure that you've done that kind of stuff before you try to speak, because I know a few people have tried to speak and they weren't able to. So we're going to allow people to kind of speak on this as well, and go through it a little bit differently. I know this has been a somewhat frustrating topic for a lot of people, so I was going to bring this up to a lot of people have asked accountants for help, and the accountants, of course, especially the ones that we work with, are trying to give as much information as they can give. But of course, the government has made it specifically clear, especially as of today, because of the fact they're really trying to avoid fraud. So they know that accountants and they know some of the lawyers, of course, know some of the ins and outs of this. So they have made it specifically that it is the company's responsibility to know these rules. It's the company's responsibility to know this data. And it's the company's responsibility to do their own calculations and keep their own records. It's not up to the accountant. And if the accountant's involved or a payroll company's involved, they also can get fully in trouble if they're doing those calculations for you. So that's why
Right.
we're going to bring it to everybody today.
So there's two main topics, and like Pam said, we'll pause between each and just do a bit of an ongoing Q&A. So the first topic is what's known as the CEBA. That's the Canadian Emergency Business Account, which a lot of people are just thinking about as a 40 grand loan. So this is a 40 grand interest-free loan for just over 2 years. And then if you pay it in full by the end of 2022, they'll forgive 25% of it, which is the 10 grand. So if people have multiple companies, like let's say you've got one operating company and a holding company attached to it, it's probably just related to one of those companies because you don't have payroll or active income in that holdco. So as with all of this, if some of this Q&A has to happen on a one-on-one basis, great. But we just wanted to share as much information as we had beyond the summaries you've already provided via email, Pam, just in a webinar format. So you have to have at least 20 grand annual payroll in 2019 to qualify for this. Many of you have already applied. It's relatively simple. You go through your bank account, where you have your corporate bank account, that same bank will help you apply for the 40 grand loan. As with all the programs, you need, your My Business account, you need your corporate checking account active in My Business account. And again, if that's something that you're not sure if you have it listed there, or even if you've signed up for My Business account, it's similar to My Account that you have listed with CRA personally maybe, but you need that happening on your business as well. So you probably need your business number and your payroll number and then your void check, but that's really key. So then if that's the case, if you have your void check entered in that area and you apply for that loan, they'll automatically apply the 40 grand as a lump sum into your corporate checking account. Okay. And so they do have a few limitations on what you need to use these funds for and not use them for. Somewhat common sense, I suppose. So then you're paying for non-deferrable operating expenses, things like payroll for your employees, rent, utilities, insurance, property tax, fixed costs. All of these programs are for companies that are really struggling in the moment. So some companies haven't had that decline in revenue. So if some of the stuff doesn't apply to you, maybe that's good news. Like these aren't mandatory programs that you have to jump at. The 40 grand loan, if you've seen that 15% decline, so that would be from March of 2019 compared to March of 2020. If there was a 15% decline, it might be wise to grab that 40 grand loan because 10% is forgiven, obviously. And if you haven't seen that decline from March to March, you can also look at the Jan, Feb to March time period. But what you can't use these funds for are prepayments or lump sums against like company debt or dividends to like the company owner.
And so it specifically hasn't talked about investments here. So I've had a lot of people ask me, can I get this $40,000 loan and can I apply it to investments? And I would say, let's not get the money in at 40,000 and take it back out as 40,000. I would commingle it into your current savings account. If you have other investment accounts and stuff like that, you might want to put the money together and then do a $60,000 business investment and say, that's my savings from my cash flow because I need this to pay my cash flow, but I also need it to be making me money while I'm doing that, because that's not specifically stated. And so far, everybody believes that will be fully allowed. It's just you've got to have that as your cash flow too, that you have to have at least $40,000 cash flow sitting there, that if you have to pay expenses, that's also got to be in your account.
So as long as you've had 20 grand in 2019 payroll, if you haven't applied for the 40 grand loan, it's definitely worth consideration and we should jump at that. Let's just pause now and see if there's any Q&A on the CEBA topic.
Thanks, Kelly. Elisa has a question. She's asking, it has to be payroll with T4s issued, is that correct? And not just a dividend payment in 2019?
Yes, so they've really, over the time period, which is really a shame, but they've really, Revenue Canada for the last 3 years, 4 years, have really gone after business owners in the sense that they've offered a discounted dividend rate of 15%, which now has gone up to about 23. They're trying to equalize the dividend with payroll, but they really don't like dividends because dividends basically are a share of earnings. They're not actually payroll to an employee. So they won't let you go back retroactive. They won't let you just take a dividend. We realize it's not necessarily fair, but that's the stipulations that they've absolutely made. For a new company owner, there's a little bit different of a calculation on some of it, but it's fairly complicated and still requires some payroll and some complication to that.
Yeah. So to summarize that, yeah, it has to be payroll. They're really trying to support companies that are about to go under. So then if you need emergency cash flow because you are laying off people, you're closing your doors, you're defaulting on rent, you've got personal guarantees attached to, corporate space, that's who the program's kind of outlined for. So, it's good news if it's not applicable to you and if you can't attain some of these programs. Almost all of our clients already have like sufficient savings and corporate savings or personal funds that they can float through to the corp. So a lot of our people, like this stuff doesn't necessarily apply to, but then if you have had a huge decrease in cash flow and it means that you're at the risk of corporate or personal bankruptcy, like that's what these programs are designed for. Any other questions, Jeff?
Yes, we have a question from San Marie. She is asking, I tried to apply, but a 2019 T4 is required. If this is not yet available, is there any way to apply or is it best to wait?
It's not based on your 2020 T4, it's based on your 2019. So your 2019 would have been done as of December. So that should be available and you can go to your accountant and actually ask them for the T4 summary for use to put in those blanks, because those are available and that's what you're paying your taxes with now in April is your T4 amount.
So if you have an off calendar year end and somehow you don't think that you have the right info, definitely come back to us, and Dean first. We can definitely get you that number to put in that box to apply. So you
Yeah,
will be
because
able to apply immediately. We'll just help you with that number.
that number is always calculated on a Jan to December basis, even if your year ends a different date. Your payroll is always done on a Jan to December basis.
So we have a comment from Elisa, then another question following that. So I'll just share the comment. She says, good to understand this because I've heard some people say it's a free $10,000. So why not just get it? Thanks a lot, Pam and Kelly, for the clarification.
And it is a free $10,000. Like if you meet all the obligations and you pay it back before December 2021, then you will get the $10,000 credit, and you've used it for things like cash flow. You will get a free $10,000. So you definitely, if you qualify, you have to qualify. And I think that's the point, with all of these things, whether it's the CERB personally, whether it's the business accounts. You're hearing the government over and over and over again say they will not tolerate any fraud or any missteps, is kind of some of the words they've been using. They won't allow companies to work around the rules they've used. There's going to be zero leeway, which again is why they're trying to cut out the accountants, is so that the businesses can't turn around and say, well, my accountant told me or told me not to do it. And that's why they're trying to cut out the payroll companies. They're also trying to cut out lawyers. Lawyers have already, helped numerous companies, even on the wage subsidy already. We've seen even some class action lawsuits already starting. So, that is happening. This is the reality. And I think the governments have tried to issue this stuff as fast and as clear as they can. But as you're seeing, they have to change stuff because they announce stuff and then say, okay, no, we've got to change it. This isn't working, or wow, this leaves too much of a loophole. Okay, we got to change that. So they're being really clear that you can't push the envelope here. And I'll talk about that in the wage subsidy as well, because they've actually now got wording in there that now is legal wording, that if they have to take you to court or they have to put you away in an audit, that wording's there. So you really have to know what you're doing rather than listening to other people. They've got really great information on the CRA Canada website now that's starting to happen.
And I would add, like, that's partly why we're doing this webinar, is like there's just kind of some misconceptions out there. You don't have to apply and use these programs. Like, these programs are for people that need it. You're not missing out. If you've been, great to have, plans in place and extra cash in place, and your revenue hasn't been incredibly disturbed by the craziness in this world, it's better to not use the programs, and not to stretch the programs too thin. It's the same thing with the $2,000 CERB. So some of these programs are there for people in need, and if you don't truly need it to get through, I would suggest, like, that's just being a good Canadian, is just doing your best, and everybody kind of helping together to kind of get through it. So not to worry if you can't use some of these programs. They're not mandatory, and you shouldn't feel like you're missing out or anything like that. Any other questions, Jeff, on this one before we move on?
Yeah, we have one last question from Jay. He's asking, my payroll is made as pre-authorized payments from my main corp account. If I receive the CEBA and commingle the funds with the funds I already have, will that be okay?
Yep. That's what, they don't really give you any other option for that. So when the 40 grand comes in, it'll just get deposited into it. It's almost like you've got, some companies might have like a 50 or 60 grand corporate cash in their checking account that they kind of use as their minimum comfortable safety net. So this 40K is just designed to kind of boost that safety net. So yep, no problem there.
And most banks, like so far that I've seen, other than the credit unions, are a little bit more of a complicated system than the major banks. But the major banks, it's a one-off little form with a couple blanks, and the loan is put into your account usually 3 or 4 days later. So they're turning it around fast, and they're getting you the stuff fast.
Perfect. So let's move on to related to the emergency account. The next slide talks about other loans. So beyond this 40 grand loan, there's a few other areas that they'll help you with. So if you have principal payments on a business loan or real estate, corporate real estate secured by a loan, you can go back to deferral for some of those payments. Not really applicable to most. Obviously, if we're doing deferrals, like that still has to get repaid. A lot of people have already worked with their personal banks and corporate banks to get any help that they need if they're critically in need of it. Like if you still have a mortgage and you've got your basic burn rate covered, there really isn't a need to defer your mortgage payments. We probably already have a sufficient personal savings. So this is again for Canadians in need, kind of on the edge of bankruptcy there. So, but this just gives you more. If a person has a business loan or a business mortgage, you can just create more of a buffer for short-term cash flow by working with your bank. But the federal government is telling those banks that they should be able to defer monthly payments.
And just another topic that, I had two physicians that felt that they're building a new house and they kind of needed a buffer with this, and they said, we'd like to use that buffer with the bank, and we've got a $6,000 payment on our mortgage every month. We want to defer it for the next 4 to 6 months. And the bank did the calculation, and when you're looking at $6,000 a month times 4 months, of course that's $24,000. What people aren't realizing is this is not a free deferral. So the banks still accrue interest. And a lot of people are thinking, it's 4 months, no big deal. But that 4 months accrues, but the bank also has to accrue that for the entire term of the mortgage for the 5 years, plus for the amortization period. So when I had our personal banker do that calculation for that couple, it's like, sure, you're deferring $24,000 over 4 months, 36 over 6. All of a sudden that calculation was almost $86,000 to $88,000 a year difference in interest. So when you're looking at $88,000 to save 24, it's a bad deal. So unless you really seriously need it and you can start paying lump sums, then I wouldn't ever suggest doing it.
Yeah, just one tool, but for those in need, okay. So then the government will also back large operating credit lines for those businesses that have major cash flow issues. So beyond the 40 grand, some people might say, well, the 40 grand isn't enough. I've got 80 employees, right? We've got many business owners that have really significant monthly overhead. So realize that there's a couple longer term loans and operating credit lines that, again, we'd have to, you'd be working with your primary bank or your primary institution and getting access to some of this. So then some of those loans are backstopped by the government. So it's basically easier to get approved and the rate will be relatively low compared to that. So,
and because it's guaranteed, so it's easier to get and also easier to get a cheaper loan. It's also based solely on your revenue. So they don't look at, your whole financial picture. They're looking at your revenue and saying, you know what, we can give you this money. Another question that I tend to get on this one that a lot of people have asked is, can I extend this out for a long period of time? And the banks so far will do all kinds of different scenarios with this. So that's something to consider with all of this, because that's pretty lenient. And when it's guaranteed like that, it gives you a lot of ability to not go through a whole credit approval process.
So it might be wise for some business owners that have a significant number of employees and a huge overhead to use this as an opportunity to get a larger operating line, because once it's extended, it might be hard for those institutions to really claw all of it back in the long run. So now is the chance to kind of build a larger buffer. But again, these are programs really designed to try to keep some companies afloat that are really stressed and hugely impacted by these times for sure. Okay.
So now we're going to talk about the wage subsidy. Oh, does anyone have any questions on that section before we go on?
Probably not on the larger operating lines, or we can take it offline too. But any questions, Jeff?
No, not at this moment. We're good to go.
Perfect. So this is probably the bulk of our presentation is the wage subsidy. That's where a lot of the Q&A is happening. Bolded is that test in terms of revenue. So again, March 2019 to 2020. And then if that doesn't work, if you haven't been reduced by 15% there, you can look at the average of Jan and Feb of this year. So I know some clients are reaching out to us saying, help me calculate if I qualify. Here are my revenues for those 4 months, and we can help calculate that to see if you qualify.
Because the biggest thing is there's two different ways to calculate this average for you. So you can either go comparative, like Kelly was saying, March to last year to March this year, or you can do Jan Feb of this year to March of this year. And if you've dropped since that period, then you have to stick with that calculation. So you can't go back and forth. Once you do 1 month as, let's say, your Jan Feb average, which is what it is an average of revenue. So you have to look at Jan Feb together and average it and then compare it to March. If you use that method, you have to continue using that method all the way along. And then your next month, if you automatically qualify, you will get April, and then you will also have to qualify for May as April and May. So a lot of people kind of think, well, I just get April for free. No, you still have to have a decline in revenue. So you can't all of a sudden kill it for April and then, all of a sudden think you're going to qualify. You're not for May, but you automatically will be if you qualify for March. They'll give you 2 months. But then April and May has to be a 30% decline in revenue compared to the same period. You have to have at least, again, $20,000 of payroll for 2019. And again, it can't be dividends. That's a question we get asked all the time. Can it just be dividends? Other people are saying, can I back pay myself? If you've never paid yourself, you can't back pay because otherwise the penalties for Revenue Canada to take in payroll and late payroll is enormous. So we can't go back and pay yourself, and you can't go back in a prior year and pay yourself because that's already been done tax-wise. And that would also be considered fraud. So you don't want to do that. And for yourself and employees, a lot of people are asking us about the spouses. So what they're calling it is non-arm's length people. So let's say all of a sudden you do a business job with somebody and you're paying them just off the kind of cuff, and they're somebody you kind of know, they're not arm's length to your business, and it's somebody you know, or kids or spouses. They are saying that non-arm's length employees are not allowed to be claimed. So the only time when they are is that they're active in your business. So if you're taking like a bookkeeper wage where it's $1,000, $1,500 a month, you can't claim that on your wage subsidy. You can only do it for the main person and for your employees. And a lot of people kind of go, why? I'm just going to claim it. Or the other option is people are like, well, can I lay my spouse off and then they can claim the CERB for $2,000? The only thing I'm saying be seriously careful of is that if you're claiming any of these benefits at the end of the agreements, they say they're going to do a review on everybody who's claiming these. So just make sure you've got your T's crossed and your I's dotted, because all of a sudden, if you lay somebody off, having them claim the CERB, which you can do, they could have the possibility of saying, well, if especially if you're a physician, this is going to apply big time, is you're still busy. You're still working. You haven't really had as big of an interruption in earnings unless you're cosmetic surgeons. So some of our cosmetic surgeons have had to close shop. We've had different types of physician groups having to actually close just due to COVID. If that's the case, then yes, I would claim that benefit. But if you're still operating as a hospitalist, you're still operating as a clinician, you've got to make sure, general physician, you've got to make sure that you don't claim the CERB, because all of a sudden, if you are not needed as a bookkeeper during the same period you've earned the same amount of money, they're going to go back and go, well, why were you needed at all any of the other years? So that's going to be hard to justify.
Yeah, to review a couple of those points. So again, this program is really designed to help people that are financially struggling. So it's not if your revenue has been consistent every single month and you can only qualify for the 40 grand loan, great. That's awesome. Maybe we don't need, it might be good news if this doesn't apply to you. If you do have these revenue declines, then the protocol. So if you're used to paying yourself payroll and used to paying the remittance on the 15th of every month, that still continues. So then what you still, in terms of action on your side, you still continue that for sure. And so Pam, you're saying that there's two methods for calculating that, the average for 2020 compared to 2020, or for example, like let's say you take March of 2019 and compare it to March of 2020 and you see that decline. So either path, so then you'll have to compare April 2019 to April 2020 and see if you still see those declines. Okay, perfect. Okay. So like I said, you continue with payroll and normal remittance, and then they release the 75% back to you. So just like you said at the very start of this presentation, Pam, I think what's been frustrating for many of us is that they haven't given clear timeline on when they're paying that back to you. So again, this is why you need your corporate checking attached to your My Business account with CRA, because that's how they'll pay it back to you. So, we'll kind of revisit that a few times, because if there's one takeaway, we need to make sure that you've got My Business account set up and established. It's an online thing. And we need to make sure that your corporate void check is in there. Not normally something that affects your financial plan, but as you know, we'll try to help with all topics. So we'll try to help you make sure that you've got that. So I guess recently they've just said that applications are open on April 27th to finally apply for the subsidy to get this money back, because it hasn't been clear to many on how do I get my 75% back. Like why they came out with this is to make sure that they're trying to preserve Canadian jobs. So for example, like with WestJet that laid off thousands of people, they were able to rehire some of those people, or for you companies that have multiple employees that you need them to be kept on and you want to preserve their dollars for their families, that's why this program exists. So if it's just a boost or a bonus, some people aren't applying for this. Some people are if they can benefit from it. So then what that would look like, it's only payable for up to 12 weeks. And it's retroactive to March 15th. So once you make application, once it opens up on April 27th, it goes to pre-claim for review. So this is news that's been recently released. The government it's their terminology. They're telling you it goes to pre-claim for review, and they don't really give you exact timing on the payback, but they'll send it directly to your corporate checking account. Anything else to add on this slide, Pam?
Well, the biggest thing that, we've kind of talked about with people is that if you don't qualify, like let's say you're somebody who doesn't qualify for this, and you say, I don't qualify for the 75% based on my revenue, based on everything else, I don't qualify. So if you don't qualify, you can claim 10% still. And so they're allowing businesses to still claim that 10%. And a lot of people have asked, can I claim the 10% plus the 75? Yes, you can, but the 75% is offset by the 10%. So people who want an immediate cash flow boost, you can claim that 10%. So that's really important that people understand, is that you can actually do that on your payroll remittances every single month and do that calculation. If you guys aren't sure how to do that calculation, we can talk about that too.
And there's a slide coming up on that. So it's if the 75% relates to you, just basically do that. You keep it simple. And then, yeah, let's loop back on that 10% coming up.
Yeah. And if you haven't done the 10%, you get the full 75.
Yeah. Okay.
So the basic claim periods, so people have asked, when are the claim periods? When are the numbers that I can claim for? There's 3 periods in all of this. So March 15th to April 11th, April 12th to May 9th, and then May 10th to June 6th. So these are the periods to which you have to claim for. So again, once you claim for March, when you look at the whole March earnings, you don't have to qualify under these dates, March 15th to April 11th. That's the actual payroll dates. So your revenue calculation isn't based on these dates, just the payroll dates are. So that's where the payroll dates. And so if you pay an employee, let's say March 14th, that doesn't qualify. If you paid an employee March 1st or you paid yourself March 1st, it doesn't qualify under this. You can only do the calculation for March 15th. And then the next ones and the next ones. You'll get 75% of the subsidy. So subsidy meaning free. So it is free money back from the government. It's not something you have to repay back. You'll get that 75% free, but it's only to a maximum of $847 a week. So if you're somebody who takes $10,000 salary, you're not going to get back $7,500. You're only going to get that 847 times 4, which works out to 2,000 something, back as an amount on the 75%. So sometimes people have said, you know, can I reduce my earnings to be, you know, $3,500 so that I get the 75% back? Yes, absolutely, because then that after-tax amount is that 847. It works out to about 3,250 gross. So you could scale your own earnings back and say, I'm just going to pay myself less and I'm going to get the whole amount, or you could still pay yourself the same amount and just claim a portion, whatever you want to do there.
Okay.
When it comes to employees, you know, that's something to think about for employees, is that same thing. A lot of people are asking, can I scale back my employees' wages? Some companies have used what's called a furlong, which means a Friday off, and I reduce my wage that way. And really, if you're going to do that, I would definitely say consult some lawyers. We've got some great ones that we can give you to make sure that you document that properly.
Yeah, and that's probably already been done in terms of management of your workforce, basically. And then, you know, we can, you know, apply this program, you know, because applications are now finally just opening up on April 27th to apply for the subsidy back for payroll you paid. So it's,
Yep.
you know, it's just basically the lesser of, you know, the 75% or the 847 per week is just kind of, they put in limits, which makes sense.
Yep.
And so I guess this slide is going into what you previously mentioned, Pam. So if some people that needed immediate benefit for their cash flow and couldn't wait for the 75% wage subsidy to be repaid for them can manually calculate a 10% wage subsidy. So then later on, if the 75% already applies, they're going to take into account the 10%. So not many have done this, and if you haven't, that's not a problem. So some use that method just to manage immediate cash flow.
Yep, which is excellent, and it is considered temporary, same kind of thing. You know, so again, if this doesn't apply to you, you don't have to worry about the fact that you haven't done it. Some people still can do it if you want to do it, and then you get immediate money back versus, you know, the other one could take 5 days, it could take 4 months. The biggest thing that we have to remember is CRA's in tax season. So even though they've offset tax due till August, they're still in tax season as of April. So you've got to assume they're quite busy at this point. So, and I know they've tried to take even all the MLAs and put them into the CRA program to try to help with all the backlog of all of this stuff. So hopefully it's quick, but I'm doubting it would be fast. So
if the wage subsidy, if the wage subsidy applies to you, most people are just going with the 75% route. So really who this matters for is business owners that are really stretched for cash flow. So you'd be the same person that's going back and applying for like extra operating credit lines, working with your bank, trying to keep as many people on as possible. And you're worried about the next 6 weeks of cash flow if the government doesn't give you back that 75%. So it's a pretty narrow group of people, and that's where you, on a go-forward basis, you might want to manually calculate that 10%. Again, we can offer some support, you know, offline, definitely.
And this one, you know, also has a qualification. The 10% has a qualification that you basically need a payroll number. You have to have signed up for payroll basically by March 2020. You have to have an existing business number. If you have both and you pay salary and you pay wages, they say wages on there, they don't say dividends, but they say wages. And if you pay bonuses or anything else to an eligible employee, that's what qualifies you here. So that's where you kind of look and you have a lot less qualifications on that. Okay.
Great.
So this is another question that we get asked quite a bit is, well, can I get the wage subsidy, hire somebody back again who's already getting the CERB payment personally, the $2,000? Can I hire them back now and be able to claim the 75%? Because of course the 75% equals about $3,250. So you're better off to take the 75% than you are personally. So a lot of people are saying, well, can I hire that person back, or you know, I work with my spouse and every day, and they're not just a bookkeeper, they're every day in the office. Can I hire them back now because they were claiming the CERB benefit? Yes, you definitely can, but the periods that you have definitely qualified for the CERB payment, you can't pay them as well, because if they've said, hey, I'm 14 days off work for these periods, you can't pay them as well as them claim it. Otherwise, the CERB benefit will get immediately clawed back. Again, the governments are a little behind, so they probably won't get you right away, but they are claiming a lot of fraud claims on this stuff if you do both. So you just want to be careful on that timing.
Yeah, and I think now we can move to Q&A if anybody has any questions on the wage subsidy topic.
At this time, we do not have any questions on that topic.
That is amazing. Maybe we should pause for a minute to make sure that there's no questions on the wage subsidy topic.
All right, everyone, if you have questions, put them in the question tab and we'll read them out to the group.
Yep, or raise your hand on the thing and Jeff can unmute you as well and you can ask your question live.
Yeah, because our goal has been just to try to keep this as simple as possible for people. You know, continue to watch some of the news that comes out, right, in terms of like release of cash. You know, we're there for you in terms of one-on-one conversations related to it. Perfect.
Any questions? Nobody?
No question.
Great. Well, we're almost done then. So moving on to the
and
next.
Just to let you know, you can apply for this. Sorry to cut you off there, Cal. Just you can apply for this on the CRA website starting April 27th. They do have a calculator on there that if you want to play around with your calculations, you can actually do your own calculator, because some people have asked their accountant to do it and the accountant can't do it. So, you know, even the ones we work with are saying, I can't do the calculator for you. So you can play around with that as well.
Yeah, for sure. You know, I guess a lot of accountants and lawyers are just kind of limited in the help that they'll offer. And, you know, that's kind of what we're known for is trying to pitch in and help on any topic. So again, we'll, you know, try to coordinate the team where possible on one-on-one basis. So that kind of leads to this topic where if you've got a significant lease and you've got a landlord, or if you are a landlord and own many commercial properties, I guess we've got both in our client list. What's coming next, the government seems to be announcing extra programs almost daily or definitely weekly. So what's coming is what's called the CECRA, which is the rent assistance program. It's again commercial. So the province basically governs commercial leases, but the federal government is supporting provinces in releasing supports for tenants. So it's going to be announced in the near future. If you've got a significant lease and cash flow detriment and cash flow issues, then you probably are already talking to your landlord about reducing parking or reducing overhead or what they can do to help you with your lease. But be reassured and knowing that there is rent assistance coming. Same if you're a landlord and own several commercial properties for your tenants. So you can almost start to give them immediate benefit knowing that that support is coming.
And really what they're trying to do is set up the same kind of program as what the banks have done with the $40,000 loan, is they're going to offer huge loans to the developers to actually pass down free rent and things like that to the clients. I know even for us, we're not in our office. So of course we have 3 underground spots, and as you guys all know, 3 up client parking, you know, 1 for staff and 2 for clients. And we already, like the day we were leaving the office, went to all these people and said, hey, we're not going to be parking there for quite some time. We want to get rid of our parking, even though some of it is in our lease. And buildings are more than willing to keep the spots for you and waive your costs. So if you haven't done that, I know a lot of people are, and they can go further than that. A lot of people really, if you haven't got a good commercial realtor, get one, because of course a lot of buildings too are offering like free rent, because downtown Calgary of course is hurting, as well as Red Deer, Edmonton. Um, they're hurting for space. So of course a lot of them will renegotiate your lease early. You might have 4 years, 5 years left, and they'll negotiate it early with the help of a broker, and you can maybe get free rent for 3 months, 6 months. And a lot of people haven't really thought of that even outside this program. So that's something to obviously look at.
Great. And I think now we're kind of into final Q&A mode. If there's any miscellaneous questions, I'll turn it over to you, Jeff.
Yeah, thanks. Nadine's asking, will you be talking about the CERB as well?
That falls under the personal category in terms of what support is there. Pam, do you want to offer any insight there at all, or?
Well, just the biggest thing, like the CERB, like with the 75%, you're obviously better off as a company, you're better off to take the 75% if you qualify versus the $2,000 CERB. Can you claim both? Absolutely not. As you're kind of seeing, you have overlap in time periods and they will claw it all back. If you do lay somebody else off and you decide, okay, I'm going to lay them off and I'm going to have them claim the $2,000, you certainly can do that, but just keep in mind is that if you wanted to pay out dividends to that person later, or you want to pay out income to that person later, you are making the claim all the way along that you need that extra cash. And so they can always claw that back if you have extensive income on top of that, because that program might get extended past the 4 months. But you have to make sure that nothing's hitting that person's account, and a lot of times even making sure that it doesn't hit that account beyond your own payroll if you guys have joint accounts. That's something to think about for the personal CERB. And a
Yeah,
lot of people qualify for the CERB if they've been laid off or they're looking after family members that are ill. That's basically how you qualify, is that if you have someone that's ill or you're forced to stay home with children because they've been, canceled from school. Almost every school now is closed, including universities are schooling from home. If you have to care for somebody from home and you have to do all of that, then basically you can do that. If you have somebody as a bookkeeper, like I said, and you don't have reduced wages, I wouldn't necessarily lay that person off and claim that, because then you might show yourself to be redundant, which you don't want to necessarily give an example to do, because really Revenue Canada, has the ability, especially in an audit, is to have a discussion with you and have a reasonable discussion. And when it turns into reasonableness, it's like, well, why were you so necessary before and you're not now? So that's the only careful thing that I would say. But if someone's still operating in your business, similar to you guys both operate in a business, the 75% would likely work out more beneficial as long as you've got the payroll qualifications.
Yeah, and that's that link there, Pam, right? I agree, is that, you're almost kind of calculating that, right? So then if, it's hard to, with the CERB, it's hard to have said, okay, I've been laid off, from my own company, right? So then if you're just focusing on like you, the business owner, for example, it's hard to like lay yourself off from your own company, right? So then that CERB, one of the qualification tests was that you had to be off work for 2 weeks before it's applicable. So for sure, it's debatable if there's multiple owners in a company. Compare and based on your level of payroll, that's where on a case-by-case basis, working with us and the accountant, we can almost try to help support you, saying, calculating if both would apply, which route would you take? Usually people are going that wage subsidy route just to give them a boost on the salary.
Yeah, because if you have no one running your company, and that's how CRA sees wages, that was their big lawsuit for a lot of people who just take dividends and they don't take payroll, is a lot of the court cases that are out there right now is they're saying, well, that's great that you have a shareholder that's running your company. Who do you have as an employee who's actually working day to day? Because a shareholder doesn't work day to day, and they have a directorship, but they don't necessarily always work as a shareholder, as an employee. So that's where they're trying to even the playing field now on dividends and payroll, because they're like, well, you can't have it both ways. And if you both lay yourself off and went the CERB route, who's running your company and why do you have revenue? So then it starts to get sticky. So you definitely wouldn't want both of you to be laid off.
They rushed that CERB program into effect for people that live paycheck to paycheck that we're going to then miss,
Or laid
feeding kids and paying rent and that kind of thing. Absolutely, which is valuable and commendable of them. If there was a layoffs or if companies, were forced to get rid of their teams, then that's where that really, helped those people where $2,000 was material to their lifestyle for that month. And then for the business owners, it's like, okay, let's help you not have people laid off, and we would minimize people on the CERB program if we can support your payroll and then ramp back up, because if all these companies have let their people go, the economy returns, and then they have to rehire. We're just trying to minimize the pain on rehiring, which is where that wage subsidy comes in.
And I would definitely, sit down, do the calculations. There's great calculations again on CRA's website on how to do the 75%, how to do the 10%, and document it for yourself, because that's something that the accountant's not going to do for you. So you have to document that yourself and kind of learn how you do. If you get a remittance calculation from the accountant, it's like, what is 10% of your gross payroll? It's not a hard number to calculate. So you just have to go, what is 10% of that total remittance? Or the 75% up to 847. It's like, just do those calculations, handwrite them on a piece of paper. Or CRA also has, like I was saying, a calculator. They also have an Excel spreadsheet if you want to, if you're a spreadsheeting kind of person. I'm not, I'm a handwriter kind of person. So just document all these things for yourself, because the biggest thing that they keep mentioning is pre-review, post-review. There's going to be reviews on this, and they're going to make sure that everybody's not pushing the envelope and everybody knows and is taking accountability for their own things. So make sure you learn it, you know it, and if you have questions, you loop back to us, and we're always there to help.
Anything else, Jeff? Any other questions?
Yeah, we have two questions from Derek. I'll start with the first one. The question is on the CERB. If I am an active employee and spouse, I am also a co-owner and director of the company and take a layoff to provide childcare full-time to my son, can I get the CERB?
That's our understanding. And then you would, again, like Pam, you had said, just, keep excellent notes and good qualification details in terms of how you justified application, and then just go from there.
Yeah, and if you're the main person who runs it, the 75% is going to work out better for you for sure.
Depends on payroll now, absolutely.
Yeah, depends on your payroll amounts for sure.
Thanks. Next question from Derek. I heard that being a co-director does not allow me to have CERB. Any thoughts?
You have to be laid off. So if you're actually somebody who was employed and you were somebody who was paid, if you are just receiving, the occasional bonus or the occasional dividend, then no, you would not qualify.
Yeah, I think what I've heard from government reading, it's like that program is if you cannot make it through per month, that's what it's for. Well, a safety net. So if you can make it through without, then maybe that's worth consideration too. It's just, again, case by case, and everybody's trying to muddle through this unprecedented time and these unprecedented programs together. So for sure.
And
So
things are changing. They've added students, they've added all kinds of things to this equation, like people who weren't making money prior. So they are adding new things for people to qualify, but no, not necessarily yet. So that's where you have to kind of go case by case here as they start kind of unrolling out more ideas around it.
Perfect.
That's all we have for questions today.
Great. Well, thank you very much for everybody's time and attention and attending. Definitely, we're here to help if we can assist in any other way.
Thanks again for making the time, everybody.
Have a great day.